Welcome back to the 90s podcast hosted by yours truly, Kevin Thompson, founder and CEO of 99 Capital Group. Thank you guys for joining me. As I always say, subscribe to the channel. As I always say, go and get my book, MLB to CFP, live on Apple and Amazon. If you have any questions, comments, or concerns, you can email us at info@99capitalgroup.com. Send us your questions. Go to the website at www.99capitalgroup.com. Schedule your appointment. As you know, we're here to do what? Educate, empower, engage, and also entertain. Follow us on all social media channels at 9iCap or at MLB to CFP. Today we're talking about the 5 trending topics out there that you need to hear. This is what we're getting, the information we're getting from the Google on the top 5 questions you guys are asking. We're here to answer those questions today. Without further ado, let's get it. So welcome back to the show. And I did a Google search and of your top 5 questions, and I came up with this list of 5. And we're going to address that list today because, I don't necessarily trust this industry. I like to give you guys the inside baseball of the industry, and I like to be authentic. As you know, I'm a certified financial planner and a retirement income certified professional and also an enrolled agent, so I do a little tax stuff on the side as well. But the Google search did give me some concerns because I know you guys have concerns about what's going on in the current environment. So one of the first questions that came up was, am I still on track for retirement with everything going on? So one thing I'll say is there's always policy constraints. There's always things changing, whether it be interest rates, whether it be politics, whether it be who's in office, whether it be who's the Federal Reserve Chair. Interest rates are always changing. Politics are always changing. But one thing that's been consistent is that the market has done nothing but go up and to the right, which means that there has been positive returns to the market. But why is that? Why has the market done so well, especially over a short period of time? Well, we can always look back at whether it be QE1, QE2, QE3, Operation Twist, whether it be the CARES Act, the American Rescue Plan. All of this stimulus and fiscal support has gone somewhere, whether it's to businesses, whether it's to market participants, but that money has found its way into markets and pushed markets ever higher. Now, are we expensive? Some people say we are, but that doesn't necessarily mean that's going to inhibit you or prohibit you from a successful and good retirement. A lot of people that I work with, a lot of the retirees have had the advantages of all that fiscal support and saw their 401ks go higher, saw their their incentive stock options go higher. They have benefited from those asset increases. Bessent came out a couple of days ago and said, if you don't own assets, you're being left behind. So for those who are invested in the stock market, invested especially in the American economy over the last decade or so, and now especially invested in overseas, you're seeing benefits from those asset increases, which again leaves you with a nice nest egg of cash to deploy over your retirement. So are you still on track? Absolutely, especially given the fact that assets have inflated substantially. Now, beyond the headlines, it's all about 3 things. If you're 5 or 10 years out, it's about your savings rate, your spending assumptions, and how you structure your income streams. That's what we do here for 99 Capital Group. We build all of that out, whether it be your Social Security, whether it be your possible pensions, and all the other assets on your balance sheet to structure an income stream that's sustainable over a lifetime. So again, like I said, 5, 10 years out, there's going to be some nuances. There's going to be some risks. There's going to be some sequence of returns risk. But whether we offer a buffer strategy, whether it be some cash or some bond ladders or other income sources, we have to weather the volatility because volatility is here. It's always going to be here. But we have to make sure that we're not selling when the markets get a little bit tumultuous moving forward. So again, if you're concerned about that, you can also give us a call. But again, most of you, if you're invested in the markets, have seen your asset values go higher. So therefore, your assumptions and what you're currently doing has worked. It doesn't mean the next 3, 5, 7 years will do the exact same thing. But again, as of now, as of today, Yes, again, I don't know your situation because everybody's situation is different, but just looking at the asset values as they've gone up, you are in a good situation depending on your savings rate, your spending assumptions, and some other variables that we need to account for. Now, this question I get a lot: should I pay off debt or keep investing? Now, it just depends on the level of the debt and the interest rate of that debt. If we're talking about paying off your home, that's 3 to 4% on the mortgage rate, I would hold off a little bit, because here's the deal. If you have $300,000 or $100,000 sitting in a bank account in a money market getting 4.5 to 5% in a money market account, does it make sense to use that money and pay off a 3% loan? And the answer is no. It doesn't make sense, because your house is free money at this point. So now you're getting 2% in regards to the delta between what you're getting in money market versus what you're paying in your house. So ultimately, it's better off sitting in cash. Now, if that interest rate is 20%, well, yeah, like in a credit card, absolutely. Let's go ahead and pay that down as quickly as possible, because that's a guaranteed return for those credit card companies. I'm going to tell you this. The best strategy is probably something like a blend, whether it's an avalanche strategy to get those debts down or whatever else that may be out there. But we have to do a little bit of analytics behind how to safely pay down high interest credit card debt, high interest debt. Anything over 5% or 10% needs to be paid down as quickly as possible, because we cannot offset that return. Yes, the markets have done well over the last 3 to 5 years. You're getting double-digit returns in the market. And again, I've told you prior why we're getting those. But that doesn't necessarily mean we're going to continue to get double-digit returns moving forward. So it's always in your best interest to pay down higher interest rates as quickly as possible, so you can start, once those loans are paid off, saving that monthly payment back into your current life. So again, should I pay down debt or keep investing? It's a combination of both. But if it's high interest debt, we need to get that paid off sooner rather than later. As I mentioned previously, I'm an enrolled agent. So one of the questions I get consistently is, what's the smartest tax move I can make right now? Well, again, I'm going to say it depends, but taxes are the one guarantee we all share, and people want to know how they can legally pay less. You want to pay less to the government? Yes, that's absolutely the case. Now, with the One Big Beautiful Bill, we've got a lot of changes to the standard deduction, QBI, and SALT. Cap's gone up. So that means opportunities, but it also means there's some landmines. Now, smart moves right now. I mentioned this in my previous podcast about the Roth conversion and if you're 65, how the Roth conversion is actually being subsidized by the enhanced deduction now, because now you're paying less in taxes, depending on where your situation is, whether you're in what state you live in. But now you're paying less on that conversion because the enhanced deduction actually offsets some of the tax liability on that. So Roth conversions may be a key, depending on where you are in your life. Of course, maxing out employer plans, that's always going to be a good deal there, because again, if you're in a high tax environment now, reducing your taxes in that higher environment is always key. And of course, HSAs, if you're eligible. I'm a big fan of HSAs. Those are health savings accounts. Big proponent of those, because why? You get an above the line deduction, you get tax deferred growth, you can get tax-free income for qualified medical expenses. It's a fascinating account. And of course, if you own a business, understand how QBI works. That actually helps in regard to that. So QBI, there hasn't been really much changes to that. It just the only change is that it actually extended. So that was good. So don't wait until April. Tax planning is a year-round thing. Call a tax professional, a CPA or an EA. Bookkeepers, tax planning professionals, they're all great. But if you want to get into the belly of what's really going on with your taxes, get with a tax professional that knows what they're talking about. Now, this is something that came up. Do I need life insurance, or am I overpaying for it? Now, In our industry, there's a battle between permanent life and term life and all the other things. This one hits a nerve because the industry sells it hard. Now, again, insurance is key, especially in my situation, because again, I have a special needs son, so I'm going to need more of that to take care of my family. It depends on your current situation and what your intent for having that insurance is for, whether it's term or permanent life insurance. Here's how I'd frame it. Again, insurance is for protection, not for getting rich. Term insurance, fantastic for covering young families, mortgages, income replacement, whole life, or quote unquote the IUL. And again, I'm not a big fan of IULs, but again, the IUL's out there. But maybe it may better serve a specific purpose, like estate liquidity or business planning, like the IULs and the VULs and things like that. But if your policy no longer lines up with your goals, it might be time to reevaluate. But don't confuse peace of mind with a sales pitch. What I mean by that is that there's some individuals out there that are selling you on permanent life insurance as a centerpiece of an asset. Now, again, I have 4 permanent life insurance policies on me and my family. So absolutely, I do believe in that in the form of whole life. But there are other individuals who are selling products who don't necessarily understand the products fully. And when I say understand the products fully, I mean that. Get with a professional that fully understands the product, not just what the illustration is going to tell you. They're going to sell you an illustration, but do they understand the core benefits of the product? And I will also always say this. Well, what happens if it doesn't work? Or in what instances would this product not work in the form of permanent life insurance? Have them explain that to you. And that's when you can make your decision on which route is the best to go. But back to the original question, do you need life insurance? If you have a family, if you want to protect someone, term life insurance, absolutely. You need that to get that to make sure you take care of yourself. Now again, if you have a ton of assets, then maybe you don't necessarily need it as much. But for a majority of the population, having some form of life insurance is key to protect your family in the form of a death benefit. And here's a question I get quite often. Is now a good time to invest, or should I hold more cash? And the answer to that is yes and yes, right? The one question I always ask is this. Do you believe the market's going to be higher today, in 10 years than it is today? Some people say, I don't know, which is a very, very valid response. Others say absolutely. And like I said, the market has been up and to the right for basically since its inception. So if history is any guide, we can believe that the market will continue to move higher. But again, it doesn't mean, because we all know what happened between 2000 and 2009. The market basically flatlined. Yeah, there was ups and downs and sideways, but if you look at the total, or the average return, or the actual return, it was 0. Total return was a little bit higher, but ultimately the return shows 0% over a 10-year period. Could that happen again? Possibly. Absolutely, it could happen again. It's happened before, so why couldn't it happen again? But is now a good time to invest? It always depends on your time horizon. If you're 5 to 10 years out from retirement, maybe reallocating some of your positions in your 401k or your portfolio may make sense. But we also have to understand that retirement is not just 1 year, 5 years, 10 years. Longevity is increasing, which basically means if you retire, say, use that number 65, that's when Medicare starts. But if you retire at 65, you got an easy 20 years, 25 years of retirement. So how are you going to offset inflationary pressures? How are you going to offset sequence of returns risk? How are you going to offset distributions from the portfolio to maximize the income? You have to be invested in what we call equities or the market, because that's going to give you the returns to offset what we call the the distribution, the 4% distribution rule, or whatever they're going to use in these days, but it's going to offset some of that distribution, because if you're taking out 8-9% of the portfolio, or 6 or 7% of the portfolio, you have to have something in that portfolio that's getting a little bit of return, that's mitigating some of that risk. So one thing I'll say, the question goes back to, should I hold more cash? I'm always under the impression that you should have enough cash in your portfolio to cover the extremes. What I mean by extremes, if you're 5 to 10 years out, you want to make sure you have enough cash sitting there that's going to cover maybe a job loss. And you want to have 6 months, 9 months, to even close to a year of income there, because right now it's harder and harder to get jobs, and it's taking people much longer to get back into the workforce. So it's imperative to have more money and sitting on the sidelines, hopefully 12 months of expenses or 12 months of income that can offset any type of job loss or any type of disability or anything that can possibly happen to you, so you don't have to jump back out there and just take whatever is out there. You need to take control of your financial destiny by having cash. That's what cash actually does. People say, well, cash doesn't earn anything. Well, right now it's earning 4%. So strike that out. Well, what about inflation? Well, it's 1.9 to 2% when you look at tips, when you look at real returns. So you're getting roughly 2% in cash. Well, but you're not getting the 8-9% in the market. Oh, that's fine. But what it's giving me is the ability to not have to go and take X job that I don't want, or not have to go and not pay an expense if I do lose my job. The cash provides two things. One, it provides a buffer in regards to a landing spot, a safety net, but it also provides peace of mind where you don't have to make decisions that you don't want to. So again, if you're investing for 20 or 30 years, timing the market doesn't work. A disciplined allocation or an approach does. That's why getting with a financial advisor or doing your own research makes sense, or listening to podcasts like these. You need to have that dry powder. And it's not, that dry powder is not just for you to say, I'm waiting for a 10% or 20% decline so I can allocate this. No, that dry powder allows you to make great decisions. Markets reward patience, not panic. So thank you guys for listening to Trending Topics. These are the 5 questions that we talked about today. The first question again was, am I still on track for retirement? The second was, should I pay off debt or keep investing? Of course, it depends on your situation and what the interest rates are on those debts. Third, what's the smartest tax move I can make right now? Fourth, do I need life insurance? And lastly, is now a good time to invest? I hope this has been a valuable use of your time. As I always say, subscribe to the channel. As I always say, go and get my book, MLB to CFP, live on Apple and Amazon. You have any questions, comments, or concerns, you can email us at info@99capitalgroup.com. Send us your question. Go to the website at www.99capitalgroup.com. Schedule an appointment. As you know, we're here to do what? Educate, empower, engage, and also entertain. Follow us on all social media channels at 99cap and at MLB to CFP. I'm here to give you guys guidance. I don't want anything from anyone. I just want to be able to give something that I wish was given to me, provided to me when I was at those ages. And I would hope that you guys take this information in and ask as many questions as you can to your financial advisor, to your financial coach, or whomever you're relying on to make these decisions. I'm here with you. I want to help you. If you want information from us, go to our channel, subscribe to this channel, and also go to our website and submit your questions, and we'll get those questions answered to you as quickly as possible. Thank you guys for listening. Stay humble, stay safe, my friends. I'll see you again soon.